Book in front of you?
Yes.
Yeah, okay, great. Yeah, so we're looking at Trade Like a Stock Market Wizard by Mark Minervini, Chapter 2, on page 11. Um, only a fraction in the middle of first paragraph, only a fraction of stock traders have made the effort to carefully study the characteristic and behavior patterns of super performance stocks. So this chapter is about what you need to know first, right? So it's more of an introduction. Second, the next page 12, no luck required. The more I practice, the luckier I get. Um, that's an interesting quote. And then in the next paragraph, as with any great achievement, super performance is attained through knowledge, persistence, and skill, which is required over time through dedication and hard work. So that's important. Um, Most of all, long-term success in the stock market comes from discipline, the ability to consistently execute a sound plan and refrain from self-defeating behavior. So that's what you're talking about there. And then the last sentence in the section, success in the stock market has little to do with luck. So on the contrary, the more you work a sound plan, the luckier you will become. And then the next section, you can start small. And then on page 13, unless you've already been successful in your professional life already, you may not have much money to devote to trading. And if you're a person just starting out, it may seem impossible to bankroll a trading operation. Don't be discouraged. You can start out small, just as I did. Next page 14. No, it's not different this time. And then in the middle of the first paragraph, in How to Trade in Stocks, Livermore said, all through time, people have basically act and react the same way in the market as a result of greed, fear, ignorance, and hope. Wall Street never changes, the pockets change, the stocks change, but Wall Street never changes because human nature never changes. And then on the bold section, on the basis of 30 years of personal experience and historical analysis of every market cycle going back to the early 1900s, I can assure you that nothing has changed very much. In fact, history repeats itself over and over. Meanwhile, new leaders in the stock market emerge, hit new high lists, and amaze the so-called experts. Okay, so and then there's a little quote there: your greatest challenge is not the market. On the next page 15, in the last paragraph, if you want a decent return, you can always put your money with a good mutual fund manager in the hedge fund or in the index fund. If you want super performance, you're going to have to go the extra mile. But first, you need to understand that your greatest challenge is not the stock market, it's you. No one's going to do it for you. Um, in the third paragraph down, shortly after I purchased the stock, it sold off from 18 to around 12. I was extremely concerned, but when I called the broker, he assured me that it was a once in a lifetime opportunity and that stock was a bargain. He recommended I double my position because that lowered my average cost and give me even more profit when the stock finally turned up. Does this sound familiar? Long story short, the stock keeps sinking and eventually, I lost all my money as I watched in horror while it fell to less than $1. Of course, the broker still got his commissions. In hindsight, the broker did me a very big favor. It was precisely at that point that I decided to do my own research and trading, while I never again surrender my investment decision to someone else. If you are prepared to invest a good portion of your time before you invest your money, you're just throwing darts. At some point, you will surely be taken to the cleaners.
Hmm.
So that is very important. Like I don't know, like I've been through that myself. That's why I'm so into learning it myself today. Um, so do you want to be right or make money? So this comes back to a quote we talked about previously. I'm gonna jump to the next page at the top. It wasn't until I suffered enough big losses that I made the decision to turn my performance from mediocre to stellar. I decided it was time to make money and stop stressing about my ego. I began selling off losing stocks quickly, which meant taking small losses, but preserving the lion's share of my hard-earned capital. Almost overnight, I regained a feeling of control. That new approach also freed me to take an objective look at my performance. In the past, I tried to forget about my losing stocks. Now I was analyzing my losers and learning from them. I saw my portfolio with fresh eyes and finally began to understand that trading is not about picking highs and lows or proving how smart you are. Trading is about making money. If you want to reap big gains in the market, make up your mind right now that you are going to separate trading from your ego. It's more important to make money than it is to be right. So that's something that I take into heart this year. Like that's one of my big motto. Like after I hear that quote many times now, anytime I'm losing money, the first thing that comes to my mind is this quote. Is are you trying to prove yourself right or are you trying to make money? Ask yourself that question. So it will keep your mindset more clear rather than trying to prove your ego, right? So it's very important. Next section, practice does not make perfect. Only practice makes perfect. Next page. The reason most investors practice incorrectly is that they refuse to objectively analyze their results to discover what their approach is going wrong. They try to forget the losses and keep doing what they have always done. So it's basically this section talking about you must learn from your failure. You have to study your trades, right? Um, the next section talk about why I don't like paper trading. To me, paper trading is wrong type of practice. It's like preparing for a professional boxing match. By only shadow boxing, you won't know what it's like to get hit until you enter a ring with a real opponent. So that's his analogy, right? So you like one of the things that he talks a lot about in the book is like you don't have to bet big. You can always start small. So that's something you just have to get in there and test the market or whatever you want to do. But you can't just do paper trading. It's not the same. Next section, trading is a business. And then somewhere down the first paragraph, you may be making numerous trades for a small gain, but by sheer volume, you turn in an impressive return at the end of the year. Or you may be a long-term investor with selected merchandise that only produce a solid return. In the end, it comes down to having your gains, on average, be larger than your losses, nailing down a profit and repeating that process. So that's important about, again, studying your average gain and losses. Next page. Don't invest in like a fund manager. The amateur investor has many built-in advantages that could result in outperforming the experts. Rule number one: stop listening to the professionals. Down the second paragraph down there. First and foremost, institution investors need liquidity to handle large block of shares they must buy to add positions that will have a meaningful impact on their portfolios. This forces big players to pick companies with relatively large amount of shares outstanding. This is the exact opposite of what we know to be a key factor of super performance, a relative of small number of shares in the flow. Big institutions have a difficult time taking a position in a company with small number of shares outstanding. Even if they can, the real problem comes later when it's time to sell the stock in the falling market. When forced to liquidate a large position, institutions risk precipitating a further plunge in the stock price as a result of the fund's large block share selling activity. An individual investor, however, can move quickly, respond in an instant during both entry and exit, take advantage of the best high growth situations available early on, and then stepping aside when necessary. One paragraph down, institutions generally need to stay invested in portfolios that are diversified across many stocks and industries. This is a primary result of their need for liquidity and belief that spreading risk over many names will reduce the risk in any one name. The vast majority of funds must stay at least partially invested even during dreadful market conditions. Moving to the safety of cash is frowned on. Most mutual funds never raise more than 5 to 10% cash. And the last sentence down at the page, an individual with a fast response time can be more patient and strike at only the most opportune moments. which is the best advantage of all. If you think for a minute that big institution approach is safer or less risky, I suggest you take a look at your favorite mutual funds and study their performance in past major bear markets. So that section is about the difference between funds and individual investing. Next section, conventional wisdom produce conventional results again. Next page. In my experience, attaining super performances in stocks come from doing things that are different from what is obvious or popular. This is often misinterpreted as risky. Applying conventional wisdom produce conventional returns, not super performance. If success were easy as acting like everyone else, we would become rich by mimicking the crowd. As you observe and analyze the market, be open-minded, willing to do things that most people won't do. Growth names at the expense of comfort. Learn to venture outside your comfort zone. Always question conventional wisdom. If you wish to be exceptional, you must, by definition, be unconventional. So that's quite interesting. Uh, so following the crowd might not always work, is what he's trying to say if you want to find the super performance stocks. The unavoidable cost of success. If you want to be the best, you have to do things that other people are unwilling to do. Champions are laser focused on their goal. They understand the power of a narrow focus. This comes at a price. It's called sacrifice. To define is to sacrifice. I fear not the man that has practiced 10,000 kicks once, but I fear the man that has practiced one kick 10,000 times. Bruce Lee. Very interesting. Because you are reading this book, I assume that one of your goals is to become the best stock trader you can be, or at least to improve your investment results. To have any chance of real success, you will have to make some choices about how you're going to pursue the goal. Odds are that you won't be the best value trader, the best growth trader, the best day trader, the best long-term investor. If you try to do it all, you will almost likely end up a mediocre jack of all trades. Next paragraph. Consequently, you will enjoy market cycles when your trading style outperforms other styles, and you also learn to accept periods less conducive to your own style. I doubt you will overcome these less favorable phases by adopting a different style each time you run into difficulty. When it comes to stock trading, I know no one who, for example, can successfully trade value in one cycle and then switch to growth the next, or be a long-term investor one day and then a day trader to suit the market de jour. To become great at anything, you must be focused and must specialize. So stay true to your style, and that's what he's talking about there. Trader or investor. The average trader spends the majority of his time vacillating between two emotions, indecisiveness and regret. Are you a trader or an investor? Some people have a personality best suited for trading, and some prefer a long-term investment approach. You will have to decide for yourself which is best for you. Keep in mind, if you fail to define your trading, you will almost certainly experience inner conflict at key decisive making moments.
Mm-hmm.
So, so he talked about indecisiveness. Should I buy? Should I sell? Should I hold? Regret. I should have bought. I should have sold. I should have held. If you're a short-term trader, recognizing that selling a stock for a quick profit only to watch it go up in double price is of no real concern to you. However, if you're a long-term investor, there will be many times when you make a decent short-term gain only to give it back in the pursuit of a larger move, right? Once you define your style and objectives, it becomes much easier to stick to a plan and attain success. In time, you'll be rewarded for your sacrifice with your own specialty. He talks about this point many times in interviews. People often get stuck in between a longer term investor or a trading style. And I try to learn that myself very hard, like understand myself how I trade. And you really have to become really aware and conscious of your decisions. And I think this what he says here is like very important. Most people get lost in this, and it's hard. I'm not saying it's easy because sometimes if you run long term and then you see your stock go down a long time, a lot, like how do you deal with that? So again, we have to be really clear how we trade. Expect some rotten days is the next section, next page. Remember, if you choose not to take risks, to play it safe, you will never know what it feels like to accomplish your dreams. Go boldly after what you want and expect some setbacks, some disappointments, some rotten days. Embrace them all as a valuable part of the process and learn to say, "Thank you, teacher." Be happy, feel appreciative, and celebrate when you win. Don't look back with regrets at failures. The past cannot be changed, only learned from. Most important, never let rotten days make you give up. Next, last paragraph. Records are made to be broken. What happened to the physical barrier that had prevented humans from running a mile in less than 4 minutes? Was there a sudden leap in human evolution? No. The change in thinking is what makes the difference. So yeah, so that chapter is it's kind of, he touched a lot of things, nothing too specific, mostly general stuff, but yeah, I think the area about you know trading long term and short term is very important to understand. Um, yeah, and obviously later in other chapters he will talk about the cycle of the market and stuff like that. Um, any questions about that?
No,
That's
this all things are very interesting. Yeah, very
yeah,
intuitive.
yeah. Um, I like I say I feel like we are in the bull market, and let me share my screen. Give me a second here. Oops. Share. Okay. Can you see my screen yet?
Yeah.
All right. I'm gonna pull up Nasdaq for example. Let's look at the weekly chart for now. Why it takes so long to load? Let me try one more time. There you go. Okay. So starting this year we have a strong run, 5 weeks run. Then what happened in the week after was, we have a inside week, so it fell. And then last week, um, it made another inside day, which is very interesting. So a lot of people are paying attention to this. So we have two inside weeks, one after another, which is very rare. Um, but you have to understand, we came from a 5 week run right here. And so we are seeing digestion right now in the last 2 weeks, which is very normal. In fact, the good thing about this week is that it didn't break to new low um, for Nasdaq. So that's and we're still seeing high above this 200-day black line moving average. So the trend is still bullish, right? We went up too fast. Now we're going kind of from this weekly chart, we're going sideways, and hopefully eventually it will bounce again and continue this uptrend, right? But Nasdaq, I think is probably, I'm not sure if it's better performance than Russell, but they're pretty close, I think. So let's look at Russell. So Russell, same thing. We see it didn't have the 5 week run, but it still was on the uptrend, and same two inside weeks in a row, same exactly the same. So they're very consistent, both of them. Um, Now, IWM did close more in the upper range, so that's a good thing. Go back to Nasdaq. I don't think it did, right? So Nasdaq was closing down at the bottom of the range. Now that's just a very minor difference, but overall they're both still in the same uptrend. We look at SPY or S&P. Um, S&P did make a new low this week, so it didn't have an inside day. So that's a little bit of a negative. Um, so that's something to watch out for. If you look at the daily chart, you will notice it broke below 21 day on Friday. But it did come back to close at the top of the range, but it's still now how do you say it's now finding the 21 day as resistance. So it needs to bounce off like next week right away. It's either gonna bounce off right away or it's gonna continue downward trend, right? So that's the tricky part because the momentum right now is um, downtrend. So you see, let me clear this for a second. You will see that it's making lower highs and it's also making lower lows.
Mm-hmm.
So the S&P is not looking good right now. It's making a downtrend. Now again, you have to look at the big picture. The big picture is that we have this strong uptrend and it's giving back, part of the gains right now, but it's not like a catastrophic pullback, right? It's more like a little bit going sideways, a little bit falling down, like in this channel line here. So will it go all the way to the 50-day right here, this red line?
Mm-hmm.
Possible. But even if it does, it doesn't look bad, right? Because like I said, from this whole rally here, it's only giving back, like let's say if it does touch the 50-day, it'll give back half of it. So the bull trend is still strong, right? We have the you know, bull trend, bull trend started in October, mid-October, and we are now very far away now from time perspective. So the market has so much time to digest all the bad news. Um, Now we'll talk more about bad news in a second, but we have given the market a lot of time to sort out what the future looks like. Remember, the market always look ahead into the future, not like what's happening right now. So that is a good thing, right? Because we have so much time pass, and the market hasn't made a new low. So that's the good thing. Let's look at Dow. It's very similar. Dow is like, you can see all these arrows that I draw. It's just consistently bound in the trading range right now. It's not a bad thing. It's digestion because Dow was the strongest going into this year. And then it kind of, dissipate December a little bit. But then, January it didn't perform as well as other index. But at the same time, it's not like it went down, right? So it's going sideways digestion. Um, so I think the most important thing that I realized, and I think most analysts realize, is that the earnings are holding up better than they thought. So that's why the market is resilient at this moment.
Mm-hmm.
Now we'll jump right away into the dollars for a second, because the dollar has been bouncing, and is no coincidence, right? If you go look at the bottom here, February 1st was the bottom, and February 2nd it bounced, right? You go back to the Nasdaq. When did it peak? It peaked on, sorry, give me a second here, a little bit slow. It basically peaked on February 2nd. So what I'm trying to say is it's like almost the opposite, right? So February 2nd is the peak here. Now we're going to jump to another one, the 10-year yield, and we look at the bottom here, February 2nd.
Mm-hmm.
It start going up. So that was a reversal day for the yield. You can see it close at the top. So exactly February 2nd was the day the dollar start going up, and the 10-year yield going up, and the market index start going down. So it's not coincidence. This is exactly how the market is behaving right now. And the scary part right now is this trend, right? The yields continue to go up. It passed this, I tweeted this line right here. It passed that, and now it's continued to go up. Some people think Friday or is like the peak, but I don't know. I don't know. It's just because they say it's near this level, right? That was where it peaked last time. So it's going to be interesting to see if that will happen again. Um, I think the market, yeah, market is taking the only good thing I'll say right now is that even though the market is in a small downtrend and the yield is going the opposite and the dollar is going the opposite, the one good thing is that the fall of Nasdaq hasn't been as strong. So here's the slope line, right? And if we go back to Nasdaq, the slope line is much less. It's not like this, right? It's not like really sloping downward a lot, right? It's more sloping just a little bit sideways. So that's the one thing I say is a good thing, right? So this is the slope line. Like if you look at the yield, it probably should be more like this, but it wasn't. So that's the only good thing I'll say in terms of this current pullback, right? Now, when will it stop? I don't know. Whenever the basically whenever the yield peak again. That's when I think will stop. And some people say we are very close. Um, so I don't know. Again, I think everyone's watching this right now. Um, will it climb towards this level? Possible. That means we'll have a longer pullback if it does, because that's the next resistance level. It's around this level here at the top. So if it does go further, then we might have another week or two of downturn. So um, personally, I think I got hit hard on my portfolio on Thursday. Everything reversed on Thursday. Um, that was what happened to my portfolio, which is not good. So Thursday was right here, you know, and I still remember that morning was okay, and then all of a sudden in the afternoon, um, basically after Bullard, one of the previous Fed member, came out and say maybe the Fed will raise 50 points next month. Maybe. That's what, well, at least he thinks they should. That's what he's saying, right? But again, he's no longer a Fed member, but the market reacted to it, and that's not good. So that was really hard. And then Friday, we saw the same type of thing happening. Most growth stocks sell off. Um, some of them recovered a little bit, but at the end of the day, it was still negative. So we have a good 2 days of selling for a lot of growth stocks. So is that the end? Maybe. We seen like the Nasdaq found the bounce here. That's another good sign. We found a bounce off the 21 day right here. Very subtle. You just nick it. I don't even know if it touched it. It's hard to tell. But pretty close to it, and then it bounced off. So that's a good sign right there. Um, yeah. Any questions so far?
No. Sounds good.
So we're gonna jump straight to into the Fed Reserve forecast by the market. So we go to watch two here. So even with Thursday's drop, after the Fed, one of the previous Fed member Bullard's statement, he's saying that the Fed should raise 50 points next month. So what is the market predicting right now? So next month they're going to go from 450 current to 475. So a quarter point hike in March. In May, it's going to go from 475 if they raised a quarter previously to 5. So another quarter point hike. So the market is not pricing in 50 points right now. Okay. And then June, so this is something new that has changed after that comment. Instead, the market now pricing another quarter point hike in June. So previously it was just March and May, a quarter point hike. Now the market is pricing in June with another quarter point hike. So that pushes July it'll be neutral, September neutral, November neutral, and then December. Previously it was November when they will start cutting rate. Now it has pushed back to December to start cutting rate. So from 5.25 back to 5. So that's the current market conditions. So the market, despite already pricing in a June quarter rate hike, another one. So that means there'll be 75 points, which will push, like I said, to 525, minimum rate, which is, exactly what the Fed, because the Fed was saying it's either between 5 or 525, right? So now it's to the upper range. So, and obviously we have a whole bunch of inflation data recently that is not good. Like they're pretty much still pretty high. So that's the reason why the market is now a little bit less optimistic about the rate hike stop soon, right? So now they're pricing it another quarter. So now the question becomes, what's going to happen in the next few months, right? So far, I think Friday we're going to have the PCE data come out. That's another inflation data from the consumer side. So that will be very important. So again, I don't know. Right now, it seems like market is really worried that inflation is creeping back up. At least that's what the data is showing. So that's something to be cautious of. So PCE Friday, right? there's existing home sales, U.S. service PMI on Tuesday. Those usually move the market a little bit. Uh, um, yeah. So Tuesday and Friday are the key data. Other than that, yeah, because Monday is closed, so it's only 4 trading days, right? So the market might continue this downtrend momentum. At least like I said, not a lot down, but like going down slightly, right? Continue. That's most likely what will happen. And then I don't know what will be the next thing that will spot the trend to go back up because most earnings are already reported, so that there's really not much news going forward.
Mhm.
So, I guess right now it's mostly going to be technical. It's mostly going to be driven by technicals more than fundamentals. Um, so and then like I said, you know, uh, go back to the data here for example. Like I don't see the forecast show up yet, but usually PMI, yeah, it's pretty low, 46, right? It's less than 50%. So it's not good. It's already that's fine. That's not, people are expecting the manufacturing like, you know, not doing so well still. Consumer spending and also PCE, right? So they don't want this to go up too much. Unfortunately, like I said, inflation data has started to creep up again. So most likely it might again be higher. So that will push the market down probably a little bit more. Um, the only thing, like I say, I'm hoping is the market not going to freak out, but it could, especially if we break this. So one of the things that's happening with Nasdaq that a lot of people follow is the 21 day,
Mhm.
and when they go above the 21 day for 20 days, it's called a power trend, and that power trend is very important because that gives people confidence to buy stocks, right? So if we break this power trend, it was able to hold that power trend because it didn't close below 21 day. Um, so we have to watch for that key level. So I think we are at that key level right now. Like I say, it has to make a move. And Friday, I was hoping for a stronger close. It didn't close like, bad or anything, but it wasn't closing strong as I hoped. So that was the negative. Um, Yeah, and then for my personal portfolio, like two stocks that didn't do well was SMCI and IBKR. So those are a bigger holding for my portfolio, and so it closed 4% at the bottom on SMCI. So this one broke out as I tweeted, and now it came back and challenged this buy point, right?
Mhm.
Um, it has been holding above the 10-day very strong. So that's where I would, see support. Hopefully, it can hold above this. IBKR Interactive Brokers. Um, you know, this one actually closed at the top of the range, so that's good. But also, it tested the 10-day as well. So here I added on this bounce, and then now it looks like it may bounce again. We'll see. But at least it didn't close at the bottom. Um, so this one already broke out a while ago. So now it's starting this uptrend at this slope. So we want to see that if it continue with that slope. Um, yeah, unfortunately, both of those stocks, which are major my holdings, did not do well on Friday. So I might prefer end the week pretty not as good as I hope. So anyhow, that's where I'm at. Um, yeah, any questions on the general market still?
No, sounds good. So, for Nasdaq, I was looking at QQQ, the chart that I have. It looks like it closed about 21 day on Friday. I mean,
Mm-hmm.
it tried to go, it went down below 21 day, but closed above.
Mm-hmm.
Um, yeah, let's see.
Yeah, QQQ. Yeah, QQQ is yeah, very similar to Nasdaq chart. Yeah.
Yeah, so basically you don't look at QQQ, right? When you are looking at Nasdaq, you look at directly index rather than QQQ.
No, I look at both.
You look at both.
Yeah. Um, I think let me see here. Yeah, they both look the same to me. At least I can't tell the difference. So, uh, Yeah, they both bounce off the 21 day. Yeah. So that's good. Like I said, that's really good. So I say I think anytime you stop between 10 and 21 day, that's a that's like what do you call? To me that's a it's not bullish and it's not bearish. You know what I mean?
Mhm.
Um, but because the momentum is going down right now, right? So
Mhm.
it has a higher chance of breaking the bottom range than the up going back up. So that's why the longer this takes to bounce, the higher chance of it breaking down, right?
Mhm.
Because people will slowly give up, and then all it takes is one big bad news, and then it'll crash that, right? So
Mhm.
that's why it's very critical, like about that, like But with that being said, like I say, I still think we are in a bull market. So we are in the early stages. So it's not going to be smooth, right? It's like I said, it's very hard to get that 5 weeks again. I don't think we'll see that again. It's going to be more like we might, but but it won't be 5 weeks. It might be 3 weeks or something, 4 weeks, right? But you know, so it's a stock picker market right now, and I think we'll talk a little bit about what other people are saying uh, later, but in general, it's not hasn't like if you're talking about traditional can slim style IBD style, it's not smooth. Let's put it that way, right? Uh, and so it takes time for the market to figure out what's going to happen. And right now, the market is saying, "Hey, with that being said, up to Wednesday, everything was looking good, right?
Mhm.
Monday, Tuesday, Wednesday, Nasdaq and Russell was acting really good, despite higher inflation data came out and stuff, right? It wasn't until like I said late Thursday afternoon, at noon, around noon, when after the blowout statement,
Mhm.
it creeped like, the market out a little bit, and Friday it just followed that same momentum. Now, like I said, it did. Whether that's long leaf, like whether people actually think it will go 50, I don't think so. That's just my own opinion. I think the Fed will stick with the 25 point rate hike. Um, I think the question is more about will inflation creep back up? And I don't think anyone know the answer yet. It's too early to tell, and there's still a lot of analysts believe that inflation will come down hard. So because of the rental data, right? The rental data is a huge component, and the rental data has six month lag. So like remember Professor Siegel, he was
Mhm.
on TV this week and he said that he built his own model, and it shows right now if you're using real time data, it's actually negative. It's not even positive inflation, he said.
Mhm.
Now that's based on his own study. So if you believe what he says, then yeah, inflation will even come down even more later. So you know, I'm still optimistic. I think the market is acting accordingly to that.
Mhm.
And like I said, normally when you go up this fast, the stock market would have gone down even faster. But it's
Yes.
not. It's not, right? So it's like I said, it's just giving back some gains right now, which is, uh, you know, so yeah, I think it's good. So any stocks that are holding up well right now, I think is like really strong sign for next market leadership.
Mhm.
Those are the ones you want to follow. Yeah, I think this is a good time to actually pay attention to the stock market. I think this is like, if I think I missed like the first 2 weeks of January, right? The run. And I wish I didn't because a lot of the stocks that were in my top list were the strong ones that actually move a lot. So now this is going back down, it's pulling even the strongest stocks down, and it's gonna give us a chance, right? Like I think one of the stocks I saw falling already. Okay, no, not like this is on my list for sure. Like I don't have a position yet, but I'm hoping it fall down a little bit, not much, but enough that I can get a position in like something like this. Elf Building. I like Elf Building. LGM is my other one that I don't have position. Again, these stocks are so strong. Even Thursday, Friday drop. Look at it. It's just going sideways.
Mhm.
it's not giving me a chance to get in, right? Like I want to buy it at slightly lower price. Um, but these two stocks are the two that I really want to get into, but I couldn't yet. So again, you can find other stocks. I'm sure there's lots of stocks um, that have strong fundamentals, and that but also have strong technicals. But some are going to pull back, and you're watching those ones that are pulling back and see how they're holding up. The ones that, like I say, pull back the least are going to be the ones that are even going to be stronger after this. So um, yeah, I just so shocked when I look at these two stocks. It's like barely budge this Thursday,
Yeah.
Friday. It's crazy. Anyhow, yeah, I I have to, if the market turns around and there's some good news. Again, right now the story again we have to follow the story. The story of the year, beginning of the year, is that maybe there's a soft landing, and then somehow, um, Fed agree with that, right? Especially in February 1st, Powell didn't really say too much about fighting the market, right? That the market, it may be wrong. So that's the storyline, and then all of a sudden after that, inflation data comes out and things are starting to worry investors again. And then the US dollar and the euro drop, like start to go up. Those two things are pulling everything down, right? Including like emerging market.
Mhm.
So um even China stocks have come back down, I think. So this is FXI, see, right? So if we look at the peak, let's see when that happened. Okay, this one happened slightly earlier, January 26, 27, right? Um, Yeah, so this is China. So a lot of emerging markets started falling back. So excuse me. Yeah, so that's what's happening. And again, those stocks. This one, you look at how much of the run it is, right? In China stocks, it's crazy. Look
Mhm.
at this, right? So this is expected. It's gonna give back some, and now it's near the 200-day line, which is a critical level. Is it gonna hold? I think it's crucial to also pay attention to the war, because I feel like the war is starting to, at least the stock markets are more starting to behave the same. And if it gives a lot of signs. If China can go back up and continue to slide, then I will see U.S. market fall on the same thing. Um, yeah. So like if we look at the other one, that this is Malaysia, EWW. Mexico. So this one, Mexico is really strong right now. It's now starting another leg up.
Mhm.
A lot of index are going down, but this one is like really strong. Holy, it's like, you know, I never considered investing in Mexico, but Jim Rope, he keep talking about it, and I was like, wow, it is, and they have very less risk compared to China, because China, the government always try to control the market, right? Whereas Mexico, they have less of that kind of nonsense.
Mhm.
So if the company, you look at the red volume, like look at this, and look at the blue volume, so at the
Mhm.
top, right? So there's lots and lots of accumulation in the Mexico market. Again, they're also coming from a very big downturn. Now it's at new high already. Very strong, very strong. Anyhow, yeah, so that's um yeah, let's jump back to one other thing I want to say. So the Fed Atlanta, they have a model, right, for GDP, and right now, as of February 16th, is at 2.5%. Like, this is really good growth. Like anything
Mhm.
over 2% is good growth. So there's no recession in the near term. That's the good thing. And so the soft landing story is now becoming more and more legit as data present itself. There was an article that I was reading this morning by IBD about wage growth, and and it talks about how the Fed also seeing wage growth going down, and that's very important to inflation. So if wage growth continue to go down, not fast, but as long as it start continue to go down, Fed will be even more open to holding interest rate, right? So those are all good news. So I think. overall, I think the fundamentals are still pretty good. And then even the technicals, I feel like I'm talking about macro here. Even the technicals are very good because, like I said, they're not showing like huge deterioration when the US dollar and 10-year jump high. So to me, that is a very good sign, right? This is really tight trading. Like I mean, this I don't think you can get for a pullback. This is like very tight. Um, you know. So now, of course, when you look at individual stocks, it'll be more volatile. But I'm talking at the index level. It's not like bad, right? So
Mhm, mhm,
uh, you know, it could fall further. It could, like I say, it could fall further to the 200-day line for Nasdaq. While the 50-day is trying to catch up. So this 50-day is getting closer and closer to 200-day, which is when they cross, it's going to be the crossover, and that's a very bullish sign. So it could happen very soon, very soon, like within 2, 3 weeks. So so the market might need a little bit more time to digest,
mhm,
and it might just stop between this range bound, which is fine, you know. So then we, like I said, for some stocks they're gonna move, and then if it does break out of this range, it'll be even more bullish. So so like I said, right now is the time to study, um, which stocks are gonna hold the best. And then when the market takes off again and start another run, um, hopefully those are the ones that will rise the most. Yeah, yeah. So um, let me look at some of my articles I'm reading this week and see if there's anything important. There's a few that I feel like is important. Um, this one, first 5 days up. Um, so this one is by Van Strat Tom Lee. Obviously he's a bull, and he's some people think he's a perma bull, meaning he's always bullish. But
mhm,
anyhow, I like to look at his stats. One of the stats he talk about here is the first 5 day when it has a positive, so it's like 1.4% was it gained 1.4% in the first 5 days, and he what he's shown here is let me try to figure out here. So all years is the gray line, so down here. Blue line is any year that has a negative prior year. Okay, so he's looking at every year and he's taking all the ones that have negative years and he's drawing how the chart looks like in the first, I guess, 5 months. So in history, right? This is in history. So you can see, right here. So then he talk about negative prior years, and which is what we have. We have negative
yes,
2022, and we have a first 5 days greater than 1.4. You can see the dark blue line,
mhm,
right, significantly outperform all the other years.
right,
Then 2023 is the current line he's drawing.
mhm,
So it's quite in line, right? Like it's pretty close. You see,
yes,
In fact, it even like you can see the top right here, it outperformed the average. So now we're pulling back, and here's the line, right? So you can see range bound. This was based on history. Range bound is between February 16 to March 7. So, but ours start February 2nd, right?
mhm,
So, we might near, like, depending, right? If we don't follow exactly, even let's say this year is even stronger than the average year, we might be almost near done on the pullback on the range bound. So this is the next big leg up. See right here.
mhm,
So if we follow the same line, um, or same trend, we might see a leg up pretty soon in a week or two. So we had to stay patient, I guess. And then until then, and then and then there was another range bound here. Again, another close to 3 weeks here, 3 weeks here. So same thing, right? We have 2 weeks of range bound. We might have one more week, and then after that it'll take off, and then after that it'll have another 3 weeks, and then it just keep following and then you have another, and then May is when it start to kind of deteriorate, at least for that month. So that's I find this very interesting because it does align pretty well, and so it gives you a time frame on how the market might behave in the next few months, right?
mhm, mhm.
So
Interesting.
me go back one second. Um, search. Um, let's see. There's a few other ones. Okay, plus video. One second. It's not working properly. Sometimes when you click back. Okay. Let's see. There's a few other ones. 18-day above MAA. Because this one is someone else. I don't know this person. I just came across it. When he did a study, I guess he did a study here, a chart. So he says since 1950, this has been correct,
Hmm.
which is pretty long time. So that's why it kind of jumped into my space here. Like I want to study this. So he went back to the 50 and draw any time S&P trading 18 days greater than 200 day after a 20% decline. 12 months later, it has all been positive
Hmm. Oh.
since 1950, right? So, and if you look at the, so right here, you can see a very small dot there.
Hmm.
As long as it's 18 days above 200 days, so usually that's after a correction, again, after a 20% decline. So you can see it almost picked the bottom every single time. Well, not exactly at the bottom, but, you know. And so what he said was, uh, uh, on February 15, it closed today at this level above its 200-day moving average for 18 sessions in a row. So
Hmm.
we have that signal right now. Okay. So to me, that's interesting. Now you can see first week, 2 weeks, 1 month, only one was negative, and in 2 months there was two that was negative, but 3 months, 6 months, 12 months, they're all positive eventually, right? So we have this signal February 15th based on this guy's signal. February 15th is when it turned 80 day. So then now is basically start counting, right? So this is very interesting to me, you know. So again, another sign of a bull market, right? So um so this one is from Mark Minervini. It's about a yeah, let's read it. Within 1 year yield hitting new highs, low put volume, and inflation headwinds, in the near term, a pullback that builds the right side of the SPY base would be normal. The key is to avoid major distribution and significant damage in individual stock chart during a pullback. So what he's saying right now is that we've seen this pullback. As long as it doesn't do major technical stuff like hurt damage, we should be fine, right? So that's interesting. Um, this one is another one. So this one is about his he they so Mark Minervini they have their own um signal, and I believe it doesn't say here. Oh, it does. January 13th they switched to buy signal for the first time since 2021, like late November 2021. So this is the first time they changed their signal to buy,
Hmm.
and uh and then since then they have a list of names that they have been watching, a list on their buy list, and the result has been mixed. As a result, we're still cautious and do not yet see the market as an environment to get aggressive, right? So basically, he's saying right now it's a little bit mixed in terms of the the performance. So even though there's a buy signal, he's basically saying, don't be too aggressive yet. So um, yeah, I think that was the main ones I want to talk about. So let's jump back to yeah. Is there anything else you want to talk about before we look at stocks? So we can jump to Enphase since that's one stock you mentioned. Um, yeah. So this is looking very bleak right now. Look at this. This is 50-day crossing the 200-day right now. 10-day, 21-day, they're both going down. So, um, yeah, that's not good. Yeah, so another mobile eye, like I don't have this on my list, and that's the same reason. Like it has run well since the earnings, right? But I sold it because um, I have a very strict rule that it has to have a good forecast, and and maybe the forecast is better than what most street expected, but it's to me like this is negative 20%. And the thing is, they might beat it, right? So like if you look at last quarter, they beat it by 58%. So they might say it's negative 20%, but then they'll beat it. So that's why the street is probably okay with that, right? Does that make sense?
Yes, yeah.
Yeah. So, but like this is not on my list, so right? But I know a lot of people watching this. It's a good consolidation here, broke out, um, and because this stock moves fast, right? So that's another good thing about it. Like, this is the IPO, and it's it moves fast. But now it's up here.
Mhm.
Now it's pulling back. Found support at 10-day, but yeah.
Mhm.
So
Can you can you also look at Enphase? Sorry, I missed that.
oh yeah. Let's go back to Enphase. Yeah. So Enphase, you know, they still have good fundamentals. But like I say, I don't know why the stock is acting like that. It's just unbelievable. Like, let me just double check the earnings here. Pretty sure it's pretty high growth, 50, at least 50, I think. But yeah. So fundamentals, okay, 49%. So fundamentals are strong, but technicals are weak, right? So 10 days sloping downward, 21
Yeah.
days sloping downward, 50 days sloping downward. And now it's about to cross the 200-day, right? So that's like the opposite of a bullish trend.
Mhm.
So yeah, like I said, for me, I will wait until this trend is over, like 200 days where at the minimum it has to cross back above. Um, or at least a 50-day, like when it comes down here. So but right now, yeah, I don't know. This is not anytime a stock cross 200-day, like you almost have to say like it's done by institution. They're not done by any, you know. So whenever it cross like that, like here is one time, this is second time. This is done by institution. So it might have the fact that no one's buying around this level tells me that institution is not buying anymore. Again, I don't know what the reason is. So either they're gonna let me look at last quarter. So they beat it by 18%. Their own forecast by 18%. So that's a good thing. But like I said, the stock reversed, right? I remember it went up and then it reversed. Yeah, right here. This is the day.
Mm.
Uh, um, there's something fundamentally wrong with this the story. I don't know what is the story, but someone doesn't like something like in the future. But earnings wise, everything looks good. Like, but maybe they're gonna slow down. I don't know. But this is a big downtrend right now.
Yeah.
Yeah. So I think if you look at TAN, which is the whole energy group, yeah, this one is also on a downtrend. Like you can see, it's now 3 days below 200 day. It has gone 3 days now, dropped 3 days below it. Finding resistance here at this downtrend line. Well, that's not good. But this holds up better than Enphase for sure.
Mhm.
But but uh, but right now, I don't know. Solo stocks are not really like Array is one that a lot of growth investors follow. But this one's holding up better than most. Um, but yeah, it's pretty tight trading right here. So this looks better than the other guys for sure. First Slow is another one that people follow. Yeah, this one's also trading really tight. See, this one is holding at the 50-day. That's where the support line is.
Hmm.
Um, yeah, this one a lot of growth investors follow this one. Earnings coming out soon. What was the rate? Did they report? Uh, yeah, there's gonna come in late, so no, it'll be a while before the report. Yeah, so in general, yeah, I don't know what's happening in the solar group. It hasn't done as well as you know as people have hoped. That's for sure. So it's they look like they're trying to build, but Enphase has been definitely on the downtrend. But Array and First Solar look like they're building a pendant type of pattern, which either can go this way or go that way later. So don't not sure. Yeah. Any other stock you want to look at?
No, I think that SMCI we can look one more time. Okay.
Right, SMCI. Yeah, so this it was up how many days? 1, 2, 3, 4, 5, 6, 7, 8 days,
Wow. Hmm.
right? So it broke out. When it broke out on Thursday, and when I tweet, it wasn't like it was during the day as the day progressed.
Hmm.
It wasn't like how morning like usually you have a morning like gap up 4 5%. It wasn't like that. So you know so that's usually not the strongest type of breakout. You want to see like a rush breakout right in the morning.
Hmm.
So now it's coming back to test this buy point. So if you bought it on Thursday, especially after it breaks out, you're underwater right now, and I think roughly 4 or 5% here. So it's just how it is. Half the stocks that break out will come back and test their buy point. So depending where your stop is, if it's 6 or 7 or 8%, something like that, uh, that's usually where it will fall back down to. Um, if we look at weekly chart, um, you know, you can see it closed like what's the range? 42%. So like kind of slightly below the halfway point. Um, yeah. So I would hope it would hold that low on this week, but you never know. Sometimes it undercut it by a little bit before it bounce again, right? So roughly around 87-ish is where the number is. So 85. So roughly around here, 87.50, right, like right here. Yeah, that's exactly where I draw the line on here. That's probably where it will go down to near if it continues some weakness. And that's a normal line, like I said, between 7 8%, and that's where you want to see the bounce again. Um, yeah, so that's where it is. But yeah, but it's like we talk about this, right? Every time it runs, it usually doesn't pause for long. This is 6 weeks straight up. This is 6 weeks straight up. This is now 3 weeks, 4 weeks actually, if you count, including the week before the bottom. But yeah, you see 4 blue weeks. But anyhow, um, yeah. But I think at the end of the day, right now, I just don't see many stocks moving strong because of the market condition, right?
Hmm.
Um, so the key is like as long as they don't pull back hard, that's the key. So yeah, but one day of action is not like necessarily bad thing. Like this is a big drop here, 4% on Friday. But if it's like another day of 4%, then I would be worried for sure. Um, but even then, that could be a shakeout. Um, that's the thing. That's why never chase a stock if you can. Unfortunately, that's the thing, right? When market conditions are poor, like right now, buying on a breakout usually doesn't work.
Hmm.
Um, but if market conditions are turned around again, and buying on breakout will work usually, right? So you don't have to worry about hitting your stop loss. But that's the problem. But even if you hit your stop loss, like for me, mine is probably around like right here. Even if it hit that, I'll I will watch right very closely. If it bounce back, I'll buy it. There's no, it's okay. Yeah, I might be losing that 1 or 2% differential, but it's okay. Like, I'm in for a longer term, so it's no problem. Yeah, so but it's looking really good. They did exactly what I was expecting. Like at the beginning of the week, it bounced right here,
Hmm.
bounce, and it's very tight too. Like the lows are very tight. Follow the slope line right here. Follow the slope line, and basically, like say anyone who bought Thursday, if they set their low as the uh that day as a low as their stop, they will have got cut, right? So that's why it's very. I think the market conditions are more volatile right now for day trading for sure. But for uh, not day trading, but more longer term, it's probably okay. As like I say, if you give it enough room, 7, 8%, you're probably okay. Like, but yeah. I don't see it hitting the 50-day line. That's my guess. It's just because they already tested here, right? They
Right.
already tested here, but you never know if conditions of the market, let's say, is poor. I can see it hitting the 21 day though. But there's a high potential for that. So, but like I said, I'll watch closely when it hit that line, see if it bounce. Yeah. Okay. So that's that one. But yeah, I like these fundamentals. I like the technicals. It's rank. Let me see what the rank. It's number 15 on the list here.
Hmm.
Yeah. So yeah, uh, who knows? It might bounce back right away, or it might have 1 or 2 more days of going down before it bounces. We'll see. But 8 days run is pretty good. So uh,
Yeah.
you know, it's just I don't know. It's just the market is always testing people right now. That's why it's not easy, I find. For it's not as simple as buy on the breakout and then make money. We're still in a very like I say we're in a pullback right now. So everything we gotta be more cautious or have you know yeah. Um yeah. So there's some newer names came up this week. Fastly is one of them.
Hmm.
But these are all the old enterprise software stuff that trying to come back, right? So you can
Hmm.
see like how there's a big job and
Yeah.
you know it's funny because um before Thursday, most of the old stocks, if they report good earnings, they beat or whatever forecast, they jump really strong. But then the opposite happened on Thursday and Friday. Like a lot of them even reverse.
Hmm.
Um, like I think Twilio was one of them. Maybe I can't remember. Oh no, Twilio is okay too. Twilio is actually jump. Um, oh, there's one. Can't remember now. Yeah, anyhow. But yeah, like toast was, some people always make joke. Toast was toast. So that was the big reversal. So we are in again when we're in a pullback market, bad news is going to be, amplified, right? So big drop here. Uh, the one that some IBD people follow is Credo.
Hmm.
Fifth, like it was huge drop, 50% drop on earnings.
Wow.
Um, Yeah, there's not much you can do if you own it. Pretty much you get your gap down 50% at the open. So it's again, it's not how do you say it? It's you have to follow the market condition. That's what I realized, right? Like and then kind of lower your risk that way. Inta's newer name. Let me see. Computer software financial. Okay, it ran well now since the earnings. So but it's showing some good numbers. Like it's small cap, 2 billion. It's near the top of the list. Yeah, this is a strong run right now. I don't have this on my list before. Uh, yeah, it's a small cap. Win, I think we talked about it last week. It's still continuing its trend. It has pulled back. I took a position on Friday. Actually, I took a position on Thursday, and then I got knocked out at the low, and then Friday I put back in. We'll see. I don't know. I don't know. It has run a lot though, so it's possible the end of the run is near. But again, I think this type of stocks right now, like so, consumer discretion is the number one sector this year so far. I think we can do the chart just to confirm that, but it's pretty close. This is the number one or two. So they're still doing really well, and look at how tight this pullback is. Like that's as tight you could get. Like really, like to me that's picture perfect. Like even more tighter than this, more tighter than this. Like this is tight right here too. That's right. Look at this. This part right here tight.
Mm-hmm.
Like tight, tight, tight. Like this is amazing. Like technical behavior. Look at the selling right here. Look at that. It dries up,
Mm-hmm.
right? Uh, yeah, this trend continues. We're still far from the highs. 140 is the high, so there's still more room to go for sure. Even if you consider this like not a high growth stock, but just a stock that's trying to come back to the previous level. It obviously it's not like I say it doesn't make a lot of money, but it is showing better results. So I think this one, let me see here. Yeah, it's not a high growth stock per se, but it's more like a turnaround story. Um, okay, it's probably in the negative zone. Let me go back down here. Yeah, it's probably. Let's see. I can't remember now. It's been a while. Just want to see if that's even turn positive. If it's over 100%, that'll be positive. Okay. 69%. Okay, so it's gonna lose 69% less money. So it's not gonna turn in a profit yet. So it was down 120 last year this time. So it'll be like I don't know, down 40 or 50 cents instead of 120. So like I said, this is a turnaround story. Um, yeah, it's very surprising how it can act this strong. I'm just surprised with the technical performance. Um, let's see. We already talked about ELF, 8. We talked about that last week. It's still, let's see. Let's just look at it quickly here. I haven't looked at it in a while. It's holding tight. Look at how tight this is. Pretty tight.
Mm-hmm.
Um, yeah. It's a nice orderly pullback. Bounce off the 10-day. Now come back to the 10-day. Look at how tight the range is. Oh my, that's so tight. Thursday and Friday, and you have to understand Thursday and Friday is very volatile for a lot of growth stocks. So the fact that this can be so tight tells me that people are not letting go, right?
Mm-hmm.
Um, yeah, this has a potential. Um, VoIP technology. So again, this is one of the oldest stocks that have crashed, and now it's coming back. So it's near the top of the list. Um, EDU, ASC. ASC is a newer name on my list here. Let's see. Oil and gas transport pipeline. So oil and gas transport pipeline, I don't know. It just okay, there's a few. Oil and gas transport pipeline, there's few services. This one is small cap, really small, look 600 million. Um, yeah, really good numbers. Look at this 100, 200, 300, 100, 200% revenue growth. 151, like this is significant earnings right here. Significant. Yeah, really small cap. So I really think like if we're gonna have a bull market, the small cap's gonna lead. And yeah, so this is on a nice tight uptrend. I like how even though it's a small cap, I like how it trade pretty tight. Um, last 2 days it gave back after 2 days of strong gains. So that's normal. So now let's say, yeah, I would watch this guy. Um, yeah, it looks pretty good to me. Yeah. So yeah, ASC looks pretty good to me. LSCC tax. I think tax ran ran up this week. I own it, and yeah, this day run. Um, look at this tightness. Oh my. Like, especially on down days when it's tight, that tells you that, someone's buying, even as people are selling. That's why it's tight. Otherwise, it'll be more loose, right? It'll be like more wider range. Um, yeah, this is in the construction mining area. Like this stock is just superb. Look at that. Really strong earnings. Look at this, growing sales, really strong numbers. Um, I just want to check the forecast here. This might be 41%. Okay, so slightly lower. 21% from 74 cents. So that would be about a dollar and 15, 20. Okay, so it's kind of similar to this. So it's still really strong gold. Yeah, like I'm like it could be on my longer term portfolio. This one, it's just really strong. Okay, it broke out to new high already. Yeah, I really like this one. Yeah, I'm gonna mark as yellow, so I think that's a good one. SMCI we're gonna talk about. PDFS is a newer name. They report earnings this week. Um, broke out to new high. Yeah, look at this volume rising as it go higher. That's incredible. Look at these numbers. Triple digit earnings. Sales are growing 35%. You know, future forecast 44%. That's not bad. 44% from oh 09. 9 cents. That would be like 13, 14 cents. So again, they might. So this one beat by 72%. So one of the things that analysts like to do, like or at least the company like to do, is they never put like a high estimate, right? They always say, hey, here's our most conservative guidance, and then they'll try to beat that guidance, right? They'll usually, if they think they'll hit this number, they'll put like give guidance like 10% lower kind of thing, right? So then they can try to beat it easily. So yeah, so yeah, this one is looking really good too. Um, yeah, really good. Um, so the only problem, like I said, with stocks like this is they already went up so fast, past the upper channel line. Really, you can buy here. You have to wait for a pullback some point where it come back to this line, or at least it goes sideways, and then then you can consider buying on the bounce. But right now it's kind of extended. So yeah, this is extended. Let me see what else. There's Nerds. I think we talked about Nerds last week. I'm not sure. Nerds is one of the old stock too. Yeah, it has run up a lot. Look at this. So now it's pulling back really strong. Um, yeah, this is an IPO stock too. That's within the last 2 years. So positive earnings, sales pretty high, looks pretty good this stock. So might have potential. Um, small cap. So again, small cap area. Yeah, looks good. Wait for a pullback, which is happening right now. Yeah, Las Vegas Sands, Monday, Peloton. Yeah. Um, yeah, lots AD&T. Let's take a quick look at this. Yeah, see this one is bouncing now. So after this pullback, cup of handle. Uh, yeah, this is like good entry point. Volume's lower though. That's the only bad thing. Yeah, but overall, it's positive earnings. Sales okay. It's a cup and handle pattern. So yeah, it might be a little bit challenging as it goes up because there's lots of selling here. So it might be harder to go up here. So it might be another, another smaller pullback somewhere. Yeah. Overall looks okay. Under Armour. Okay, this one's on the downtrend, so probably don't want to look at it right now. DC App TV. Let's take a look at this one. Oh, those drop. Well, this one is on a nice uptrend. Has a pullback right here, and then bounce. Now it pull back in. Yeah, this looks pretty good. Yeah, I think this is good to have an entry point somewhere here. Yep, looks good. Earnings growing and sales okay. CGL, Wash Carbon Group, 25 billion. Yeah, it broke out this week on earnings. So it just started. It looks pretty good, this one. So it broke out right here.
Mm-hmm.
It's a slow movement though. You can see it's a slower movement. It took a long time to move up. But now it looks pretty fast. It's like going up at this slope.
Mm-hmm.
Yeah. So volume was kind of low on the down day. That's good. So yeah, this is a good entry point, I think. Yeah, that's good. Yeah. Um, TDG, NYX, New R, UL, UAL, BE. Yeah. Yeah. This lots of new names. Bloomin, this one, Restaurant Group. I think Restaurant Group are doing well too. They report good earnings, bounce, and then went up more on Friday. Um, so earnings starting to turn around, and let's see what the number looks like in the future. 21%. So it's not super strong growth, but just like improvement. Um, yeah. So improvement from 73, 21% higher. Sales are kind of not growing that fast. So yeah, it's not the strongest stock, but surprisingly, it's in the past anyway. But now it has a high, like a strong slope here. That's why it's in the top 100 here. Um, yeah, like it's hard for me. I find it's hard to identify the leaders right now. There is lots of small, and also a lot of small caps are in the list here. Net is an older name.
Mm-hmm.
Cloudflare. So this one is coming back up. So this one is doing well. Look at that.
Wow. Mm-hmm.
Like Nasdaq is red this week, but Cloudflare is still blue. 5 weeks of blue. Look at this volume. Wow, look at that. 4 weeks of strong volume. Of course, the numbers are pretty spectacular right now. 500%. Um, yeah, this is actually pretty good. Look at the volume here on the up days versus the down days. It's now pulling back to the 10-day. Yeah, it's a good near a good entry point here. So yeah. So that's I noticed, like I said, I noticed a lot of the older stocks. Um, it's giving it's moving nicely. You know, um, not all of them, but some of them. So this is one of them. So that one looks pretty good too. Uh, Gil. So Gil is the health side. The health stocks have been a lot of people. I don't know why. A lot of IBD guys like the health sector, and I think part of the reason is because most of them they did well last year, right? That's number
Mm-hmm.
one. Um, and then also, even though this year it hasn't really participated in the run in January, it's going sideways. Like it's like building a base, right? And this is a stock. But if you look at XBI, uh, it's a long base. Look at this base. It's a long, long sideways base, and this now is building a handle that's even tighter. And so everyone's like looking on Friday, you know, it came back now to the 10 days. So If it breaks above 10-day, most likely it's a buy signal, right? And just how tight at the bottom right here, 5 straight days of tightness right there. It's just it's a very good risk reward ratio is what I'm trying to say here. Um, you know, yeah, a lot of people are watching this. It's a this is at the index level, but it just shows like this base is really tight, and now this handle here is also tight. Um, yeah, I should check my buy point. It's there's a high chance if it move, it will find it. You know, it'll move, and especially given like now the situation. Again, I'm not sure like what's gonna happen. Like maybe the one that run well the beginning of the year, all those stocks are gonna lay low now. Not saying they'll go down hard, but they might go sideways, right? Um, so then maybe like more defensive stocks like the health sector might bounce back. So 8702 right here. Um, I'll set that buy point there, alert there. The other one is energy. Still a lot of people like energy. It broke down Friday.
Hmm.
So yeah, this week I think none of my oil stocks survived. They all got stopped out. So it's unfortunate, and yeah, it's not good. But it's still within a range at the end of the day. You know, the XLE, and um, yeah, everyone's still watching this long-term trend right here. Um, but yeah, we right now we're heading back to the bottom range, so that's never good. Um, but they are saying seasonality, usually oil will start to turn up soon. So between like February and April usually are the strongest time for energy.
Hmm.
So that's something to watch out for. So it could, it was right here. Yeah, this was the March, yeah, last year. Yeah, so this was the run. So you see, it's almost the same pattern. See, cup and handle, sideways pattern, cup and handle, sideways pattern. So now, and then it has this run last year, right? So will it happen this time? We'll see. It might, like, so, uh, yeah. So that's energy.
Hmm.
CPA. That's the another airline. So airlines are really strong. Um, you know, see, we near previous high.
Hmm.
These numbers are spectacular. Look at that. Um, this one is small cap, right? So it's going to be more choppy. See, there's a more choppy right here. But the overall rate, overall trend is upwards. But if you don't, like let's say you just want to buy jets, because there's so many airlines, right? You can buy
Yeah.
jets. So this one has yeah, this is now consolidating, pretty tight. Um, yeah, we'll see whether this is it's trading near the bottom of the range. So we'll have to see. But it's not falling apart. So that's the thing. So just run, pull back. So this one pull back. See, this one is stronger. And then this time it hasn't really pulled back that strong. It's more like a side range bound pattern. So it's good. Jets. So PCAR is a stock I own, and industrial area, trucks and parts, equipment stuff. Um, yeah, really strong numbers. Um, let me see. It's like it did have this earnings bounce really strong, and then it kind of went sideways. Now on Friday it broke out of this area, this range bound, right? So but Thursday, I don't know what happened Thursday. It was a very volatile day. It swing all the way to the bottom, but then it closed back at the top. um but then Friday, like I say, after that it broke out. So I think like this sideways pattern probably shake out a lot of weaker investors. And
Hmm.
And now once it go up, I'm gonna expect it to move up nicely now. So yeah, we'll see. Yeah, but yeah, it has like a few weeks of sideways pattern. Usually that's good enough. 2 3 weeks. Usually I like to see 2 3 weeks uh for a longer pattern. So yeah, I like the numbers, that's for sure. I think this next one is also strong. Uh, peak 52%. Yeah, that's anything above 50% is pretty remarkable. Consistently, right? If you can grow consistently over 50%. Yeah, Peacock is really strong. That's one of my stocks. MBR, ALV. This is also in a similar group, I think. Yeah, or auto truck, original equipment. So the trucking, I remember the index one. There's an index for truckers. They're doing really well. That's what Jim Ropel been highlighting. So look at this run up here. Go up really strong, and then now it's like consolidating really tight, right? So this one, yeah, it hasn't really quite break out yet. It pulled back, and I mean Friday it kind of make a new high slightly on compared to previous day. But if it move Monday, I mean Tuesday after the holiday, like that'll be a good buy point right there. Yeah, this is a huge cup. Look at this. It's a long pattern, and then that's why like it's so tight all of a sudden. It's really good. You know, really really tight all of a sudden. That's really good behavior. And so 90. Yep. Lots of like I said, lots of smaller cap stocks is where the market is at right now. That's which is not a bad thing. Like instead of concentrating on the mega caps and stuff, that's what most analysts focus on. But
Mm-hmm.
uh, Merck, AZN, all those health stocks. Um, yeah. So these are like I said, these are all the ones that have reported. So yeah, they're doing fine. I don't like I say I haven't seen many like even if you look at some of this stuff that have uh let me see which one. Look at LSCC, that's another chip stock. Look at the chip sector for a second. That's probably the strongest, one of the strongest groups. So this one ran up like crazy, and then it has this. It went up above the upper channel line. Now it coming back down right to below the channel line. So it might bounce off this 10-day. I don't know, or it could consolidate more and go below that and then bounce. It really depends on the market. Um, but yeah, most stocks are most growth stocks are falling Thursday and Friday, just like this one, which is normal because again, the two previous days it jumped up so much. So uh, so the question is how far it will go back down, right? That's the unknown right now. But in general, the chip sector. So let's look at SMH. Yeah, see, like that one outperformed LSCC outperformed the index, right? Because the index peak, just like the market did, probably
Mm-hmm.
same time,
Mm-hmm.
February 2nd, right? But whereas that one just, was still hitting new highs a few days ago. So, you know, this is a pretty tight action. Um, I like it. So I think, like I say, I think like the first time around, if you miss the semiconductor group, this is giving you a potential second chance. As soon as it passed this upper channel line, I think like it's gonna have another leg up. So let's jump to Nvidia. Lots of people are talking about Nvidia. So there was some report about how they could quadruple their sales in I don't know how long, in a few years or something, because of the demand of AI chips. Um, so and they're the leader in it. So um, yeah, definitely a strong uptrend. Um, it has kind of pulled back pretty hard though. I don't know why. uh, But the volume is low. That's the good news. So see all these blue bars, blue volume days, really high. And then, when you have 3 days of sell and the volume is not even above average, that tells
Mm-hmm.
you a lot. So yeah, this is, it might go to the round number 200. That would be a good bounce right there. So Nvidia, again, um, they will report this week, right? Wednesday. So that'll be important too for the market as a whole. What they say. If they say, yep, things are, but the market already been anticipating. That's why there's such a big move. That,
Mm-hmm.
there's a huge demand for AI chips now, and um, apparently I didn't know this. I just learned this yesterday. Like ChatGPT ran on 10,000 NVIDIA AI whatever you call it, servers or whatever.
Mm-hmm.
Yeah. So, um, and that's just one of them. So there's lots of companies are building AI stuff now. So that will be, Nvidia could be the biggest gainer from this
Mm-hmm.
in the next few years if this become a trend. Because right now, like all I hear is, business are starting up to, to do AI stuff, and they're all trying to figure out how can they build new business, right, and stuff, right? So yeah, um, yeah. Any other questions about this?
Oh, no, that looks
It's,
good. But if we are done talking about stocks, then I would like to touch little bit back on macro. Uh,
okay. Yeah, yeah, yeah. Yeah. Go ahead. Let's jump back to macro. What do we want to look at?
yeah, so just so as we talked earlier, right? 25, 25, 25. That's what market is expecting for next three hikes. Uh, and like since we also saw the index is not made a new low yet, so looking good. So uh, there was recession talks, and yeah, just want to touch base on that basically.
Oh, recession talks.
Yeah.
Yeah, like it could happen, right? No one really knows right now, because there's a lag with interest rate. They raised 4.5%, and I don't know
Hmm.
if you saw the headline on Thursday or Friday, I can't remember. Highest credit debt since like '08 or something. Something,
Right.
yeah, it was huge. I don't know if that's credit debt was just credit card or all credit. I don't know, but it was a headline, right? So people are dipping into not only no longer dipping into their savings, they're now borrowing from high credit stuff
Hmm.
for their spending. So that's not good, right? So eventually the consumers are going to tap out.
Yes.
And so in the second half, that's where most people predict, right? The second half is where consumers are going to tap out, and will that spark a recession? It's highly possible, right? Um, the question, and I was listening to one analyst, I couldn't remember which guy, but I can't remember like who it is. But anyhow, it wasn't a regular guy, but he was on CNBC, and he talked about how he's a bullish, and first of all, and he did say he thinks that the market is now starting to price in a recession, meaning 6 months from now, right? Like it's going to have a recession, but the market is pricing that in right now. So that's what he says, and again, and there's also the talk of like rolling recession. So we don't have one big giant recession like normally would happen. In fact, what happened in the last year is that you have this rolling recession, different areas, right? First it was the goods area. Remember last year when Walmart and I can't remember all the retailers that got hit so hard. Remember?
Hmm.
So it was the good sector that hit hard first, and then eventually it was the even the what do you call the lumber and all those, everything fell off like super hard, right? Even oil, right, went from 130 to 80, right? So it was all this good stuff, And now they're saying, the service stuff is starting to roll over, right? So, for example, even airline ticket prices is starting to roll over, right? Um, so again, but that's the small area. They want to see like enterprise services, all these other like software services. But the thing is, you know, but the market is not showing that, right? The market is doing the opposite, right? The market is actually going up, right? If you look at like let's go to IGV software services, right? It's doing uptrend right now, just like the market is. So they might be overdone, is what what's happening. Because they've been falling for over a year, so the market was anticipating a recession. It's just the thing that's happened is that it just took a longer time to hit the recession, which is
Yes.
let's just say the second half of the year, right? Is the
Mhm.
recession happen, right? We're not going to see recession this quarter. Like I just showed you the Fed GDP, Atlanta Fed GDP is like 2.5% right now.
Mhm.
So next quarter, probably it will slow down, right? And then the third quarter may be below zero GDP. Um, but the market, I don't, maybe like that's why, maybe in May the market will start to fall, and make a correction. But you have to understand this market could run up. Right now we're mid-February, and we're in a pullback right now. If we come out of the pullback by end of February and start another run until like I don't know April or something, we could double this. We could go from like 15%, because I'm
Mhm.
pretty sure. Like let's just take a quick look. Um, let's bring up XLK. And we can look at this. I forgot to look at it, but we can look at the sectors and just see how far they've gone. I know it's pretty high now. Let's see, let's here sectors add. Okay, so here. Oh no, I have to change this date. How's it? That can't be that high. So we're just looking at this year only. Yeah, so retail 17%, right? And
Mhm.
then consumer discretionary 16%, and communication service 15%, and technology sector 12%. So those are the top four that really stands out. And like I say, if it run for another 2 months, this could be like 25-30% by then, easily.
Mhm.
And then it might have a correction because of the recession. So it's possible that yeah, the market will pull back during the correct even, not just a pullback during the recession coming in May. It's possible, but I think the market is gonna that's exactly what it's doing. It's gonna ignore that right now until then, when it's clear that a recession is coming. Right now, it's not clear if it's coming.
Mhm.
Right, the consumers are still spending. Yes, they're borrowing more money, but they're not tapped out yet. You know, um, so that's why I think that's what will happen. The thing is, you don't want to wait for that to happen while the market is going up right now, because I don't know how the market has been really going up really fast, at least the first 5 weeks. It has kind of quieted down the last 2 weeks, but even then it's not like a sharp fall, right? Like I said. um so if we run another 5 strong weeks after this, we
Mhm.
could be near the highs, like maybe not at the high, but we are pretty close to it,
Mhm.
you know. So you don't want to miss that, you know. That's my take on it, right? So coming back to the Nasdaq, so Nasdaq is right here. I don't know how far it'll go. There's different levels here. There's one level here, and then there's another level here, and then this is the high level. So um, and this is assuming a recession comes. What if there's no recession comes? Then we'll see. The market go back up. I don't know. Depends how fast it's going. If it's going at this rate, yeah, it can hit the high by the end of the year. But if, let's assume that's not going to happen. Let's say it might hit, 14, 15,000 easily by end of the year, right? So, but like, go back to S&P for a second. Um, Yeah, I think it's similar. This one is slightly closer. There's three levels of highs here. Those are the peaks. So um, yeah, so very similar to Nasdaq, I guess. It's just the gap is not as big as the Nasdaq one. But they usually like the market the indexes they perform relatively, meaning that's just like recently, right? Nasdaq outperformed S&P. So even though S&P gap is not that big, but Nasdaq gap is bigger, but Nasdaq might outperform. And again, just like what I talked about last time, coming out of bear markets, you want to see Nasdaq and Russell lead, and that's what exactly they're doing. They're leading, right? So let's go look at that as well. Uh, this here, major tax ad. Yeah, so you can see, let's start from the beginning of the year. Yeah, see, Nasdaq is outperforming. Russell is second.
Hmm.
Using IW, it's probably the similar. The 0.0 US. Yeah, it's same, almost the same. And S&P and Dow. See, Dow is the slowest performer this year so far. Now, like I said, I think you know I still think the first quarter this quarter is going to be strong. Um, I just feel it. Like even when you look at the charts, it just tells me it's telling me like this two weeks of pullback. Even if next week it pull back another week, I just don't like. And this you have to understand. The last 2 weeks, lots of things happened, right? We have the Fed talk. We have three inflation reports, and now we have another one this Friday, coming Friday. Um, People already expect it to be high. Like that's how it is. Like people already expect it.
Right.
Um, so again, but the market is acting so strong in general, like so again, I think it's digesting right now before another big outlay, right? Um, yeah, so that's kind of what I feel is going to happen because it would have easily fallen back to the 50-day like this. The channel line would be more like this if it was weaker, but it wasn't. That's the thing. Um, so um, yeah. But I like I say, I think a lot of the high flying stocks like ABNB, um, they pull back hard right on Friday.
Yes.
But that's one day, after like what 4 or 5 days of run, right?
Hmm.
It's gotta pull back. That's just how it is. So I don't look at that as negative. I just like I said, it's more about like your entry point. If you want to buy stocks like this, I'm sure they'll keep doing well if the market to do well. The question is where's your entry point, right?
Hmm.
Um, that's just how I look at it. So um, yeah, like even so far, I took a couple of dips at it, but didn't really go do too well. This one took a harder hit. So this one was the first one, the first few ones to run, and then it just pulled back like 6, 7 days in a row. Bounced one day. I think I got so this day I think I bought back in. I got stop out. Uh, so again, market condition not ready for it yet. Now it's continued to dip to 21 day. Now, this is probably one of the how do you say the one that have dropped a lot,
Hmm.
right? So um, yeah, but I took a stab at AI. A lot of people follow this stock now. If AI continue to become dominant in the news and in the media, I can see it becoming like more and more like a meme stock. And I like this stock because I like just because the chart is easier to read. Like if there's many other ones like one that other people follow is SoundHound is another AI stock, but this one is much smaller. But I like AI just because it's much easier to read the chart. And so we have this strong run, almost like meme type of run, right? Over 100% very quickly. Now it pulled back really hard and it bounced on the 21 day, right? Um, and then it kind of hit here. Thursday was the day everything reversed.
Hmm. Hmm.
So Friday, so this one is acting exactly like how it should. and Friday rebound from the bottom and close above 10-day. So to me, that's a buy signal. Um, or you can wait till we make a newer high. That would probably be safer. That would be another signal. So yeah, so like stocks like that are going to move fast, and you're not. It's not stock. I don't know. At least not for me. I don't. Excuse me. I'm not playing this type of stock to hold. But if you have another run, then it could make a new high, right? Like to 40 or even 45. You know, something like that. Usually they go up at least 50% from the peak. So um, yeah, or even more. But I don't know. Just I just feel like the other thing is that if you don't want to trade that kind of stock, but you still want to be in AI. Microsoft seems like the giant that everyone wants to follow, but it has fallen hard now, 3 days in a row, which is good for people who want to get in, right? So um, so here we want to see if it holds this 21 day. Very important. Um, but the 200-day line is not that far, so it might drop one more day and then bounce, right? Um, So that's kind of another stock like Microsoft is where I think look at the volume selling, it's drying out. Look at 4 days of like the last 4 days of selling is all dry up. It's incredible. Um, it just tells you that no one wants to let go of this stock. Um, so Microsoft is definitely good. I know Google is taking a big hit because of Microsoft ChatGPT. So this one is look worse. Um, but I don't know. For me, I'm usually follow the leader rather than the second. Um, so I think Microsoft has a high chance of dominating this industry, just because of their investment in OpenAI, right? Um, so that's yeah, that's interesting. Sorry, I jumped back into stock, or I jumped to even AI.
No, no, no worries. I actually wanted to talk about Google and Microsoft. So yeah.
Yeah. Is there any other question you have about macro?
No, I think we you already talked about it. Yeah.
Yeah.
Sounds. Mhm.
Yeah, I think right now, you know, there's still lots of bears, which I like because the more bears there's still like, but there's some of them have turned. Some of them have turned from bulls, bears to bulls now. At least some of those analysts are here on CNBC, and so but there's still lots of bears. So to me, that's always a good thing because if everyone was a bull, then who else left to buy, right?
Mhm.
But as each bear turns into a bull, they have to buy, and that will what move the market higher. Um, but one thing I wanted to say is like I like this is why I believe it's a bull market because I feel like they're gonna rotate, and that's how bull market happens. Growth stocks will take the lead sometimes, the value stock will take the lead sometimes, but they might not always be in sync. And that will keep rotating. And as they rotate, the market goes higher and higher and higher. And so that's why we don't just look at one index. We need to look at Dow. If Dow start to move, I'll have more confidence in this bull market. And I think it will. I think it's just a matter of time. It's going to break out of this zone and go higher. This is a nice consolidation. So the industrials, um, you know, it's very important for a bull market, and so that's why it's not just it can't just be tax, right? Like tax can hold the whole market, but industrial is very important. Let me see if I jump to my let me see here. What I think I closed it. Give me a second. Go to, just want to show you the trend this week. Even though it was a down week, generally it's okay. Like like most of the week, I still see accumulation. It's not a lot, right? Last week was worse. There's like 3 days without any accumulation, but it's not a lot of accumulation this last 2 weeks.
Mhm.
But like I say, it wasn't negative, which I was surprised. I would think that with so much, distribution, there was one day distribution here, one day here. I would think that there's more negatives, but surprisingly, this is a net. accumulation distribution. So meaning like the accumulation is more than distribution by 19 stocks here.
Mm-hmm.
So slightly net accumulated. It's not like I said, not like here 100, or even, you know, yeah. And then if you look at these numbers, like here you have 800, 600 stocks, but here you have, like I say, it's not super negative this week despite Nasdaq down. So, yeah, it's not like all bad news is what I'm saying. So that's a good sign. Um, if you look at, sorry, if I go here, oops, let me show all stocks here. Oh, it's frozen. Oh, okay, there you go. And I look at the like so this week as of Friday, you see red retail restaurant is still humming at the top here. Wing is reporting, like Wing is a big growth stock that most growth investors follow. I think they're reporting next week. I think, I don't remember. Or maybe the week after. I can't remember. Let me see. Oh, okay, yeah, February 22nd. So this one is just broke out and it's pretty tight around the buy point. And this is, this. So if I compare this to SMCI, right? This one looks way better because it came out and then it has the buy point right here, but it's at after it reaches a much higher high. Whereas SMCI was like, testing much lower. So that's the difference, right? So here you go. But again, nothing wrong. It's just, you just have to be very careful where your stop loss is and how you handle the bounce here if it does bounce. So it's just, obviously you don't want to get your stop hit. That's the most important thing. But, this one is, definitely holding much better, you see. So that's why a lot of growth investors like Wing. So that's reporting on this week. Um, this one, cars. I'm just trying to see if there's names. This one did well. APTV did well. This is the original truck equipment. We looked at that already. Very strong group. Um, Power equipment, medical products, oil gas transport pipeline. We talked about this. ACS, ASC, yeah, computer networking. So this week, like I said, overall is not bad. Surprisingly, there's still stocks being accumulated. Um, yeah, like and so it's not a bad thing. Yeah.